You downloaded an app called Life 360. Maybe you downloaded it for your family, to share locations, to know when someone arrived somewhere safely, to have the quiet reassurance of a blue dot on a map that tells you the people you love are where they said they'd be. Or maybe it was GasBuddy, because gas prices changed and you wanted the cheapest station on the way home, or fuel rewards, or Rootly, or any of the dozens of apps that serve the specific, ordinary, completely reasonable purpose they advertise on the download screen. You downloaded it. You granted it the permissions it requested: location, contacts, device storage. You pressed allow, the way everyone presses allow, because the alternatives that the app doesn't work, and you downloaded it because you needed it to work. Here's what else it was doing. In January 2025, the Texas Attorney General filed a lawsuit against Allstate and its data analytics subsidiary, Arity. The allegation was specific. Allstate had paid app developers, the companies behind Life 360, GasBuddy, Fuel Rewards, Rootly, millions of dollars to embed Arity's tracking software inside their applications. Not disclosed on the download screen. Not presented as a feature. Embedded. Invisible. Running. When you downloaded the app to find your family or save 20 cents on gas, you also downloaded a surveillance tool that tracked your driving behavior and transmitted the data to an insurance company that used it to price your policy. How hard you brake, how fast you accelerate, what time of day you drive, how often you pick up your phone while the vehicle's moving, the routes you take, the patterns of your movement across weeks and months of ordinary life you were living, while a risk score was being built in the background. According to the lawsuit, Arity collected trillions of miles of location data from more than 45 million Americans through this method. 45 million people who downloaded an app for one reason and were surveilled for another. The FTC eventually confirmed what many suspected. A data pipeline exists. It runs from your car, your phone, and your apps through data brokers like LexisNexis and Verisk directly to insurance companies making pricing decisions using data you didn't know you'd provided. Here's how the full system works. When you apply for a loan, a car, a personal loan, a credit card, a mortgage, the lender pulls your FICO score. It's the number people know. It's the number they work to improve. But about 20% of the population is considered credit invisible. They don't have enough history for the FICO model. The solution the industry developed for this? Alternative data? In promotional materials, alternative data sounds like rental payments or utility bills. But here's what it also includes: GPS coordinates from your phone, the specific apps installed on your device, how frequently you charge your battery, whether you receive more messages than you send, whether your contact list includes last names or just first names. Each of these signals has been used by lenders to predict loan repayment behavior. A person who charges their phone frequently might have an older device. An older device might indicate an inability to afford a replacement. An inability to afford a replacement might correlate with higher default rates. The logic holds in the model. What the model doesn't tell you is that the signal's being used. There's no disclosure on your loan application that says, "We're also evaluating your battery charging frequency." The alternative data layer operates invisibly beneath the application surface. You filled out the form, but you didn't consent to the risk score generated from your behavioral data that also shaped the lender's decision. Now, extend this to insurance. LexisNexis Risk Solutions receives driving data from two pipelines: your car's own telematics and the apps on your phone. They package this data into a product called Telematics On Demand. Your insurance company purchases a score. That score affects your premium. You never signed up for usage-based insurance. You never agreed to a telematics program. You downloaded an app for gas prices, and you became a data source for a risk model, producing a number that's changing what you pay for car insurance every single month. In 2026, behavioral data from financial apps is even affecting interest rates on credit products for people who've already been approved. How often you open the banking app, whether your balance shows consistent end-of-month depletion, how regular your income deposits are. All of it feeding a behavioral risk model that affects the price of the money you borrow. 50% of consumer data collected by companies doesn't go to advertising. It goes to risk modeling for insurance, credit, and employment screening. The phone in your pocket's the most detailed financial profile ever compiled on a private individual in the history of consumer credit. Here's what exists in your name right now that you may not know about. 1. A CULU report, the Comprehensive Loss Underwriting Exchange. It records your insurance claim history for up to 7 years. When you apply for insurance, the company almost certainly pulls your SLU report. 2. A LexisNexis consumer disclosure file, a profile built from public records, data brokers, and those telematics pipelines. 3. Credit bureau reports, Experian, Equifax, and TransUnion. Errors in any of these reports can affect your rates and approvals for years without your awareness. Here's what you do about it. Audit your permissions. Review your phone's location settings right now. Change background location access to while using the app for every application that doesn't strictly need your location when it's closed. Life 360 doesn't need to track you while you're at your desk. Request your files. You're entitled to a free copy of your SLU report once per year. You're entitled to your LexisNexis disclosure file. You're entitled to your credit reports from annualcreditreport.com. Dispute errors. If you find inaccuracies, dispute them in writing. The Fair Credit Reporting Act requires these agencies to investigate disputes within 30 days. Most people don't have this knowledge. The financial system isn't evaluating you only on the 5 factors you've been told matter. It's evaluating you on the totality of your digital behavior. The price of free isn't nothing. It's data. And in 2026, your data is the most valuable thing you produce every day without knowing you're producing anything at all. Now, you know. Start with the permissions, then the reports. And remember, the system isn't just assessing you when you apply for something, it's assessing you continuously.